Hey, welcome back to Everyday Economics, the podcast that we learn about the economic world happening around you every day. I'm your host, Chris Krug. I'm the CEO of the 501c3 nonprofit, non-person Franklin News Foundation. Everyday Economics is a production of America's Talking Network. You can subscribe to all of our podcasts at americastalking.com. To support Everyday Economics, please make a tax-deductible charitable contribution by clicking the link in the show description. We're recording this episode on Friday, August 16th, and joining me, as always, my friend and colleague, Dr. Orphe Divounguy, PhD economist. Dr. O, the column that you're writing for the Center Square, I think, is really kind of picking up steam. I'm starting to get feedback on it from friends, neighbors, family, and people sort of out in the Center Square audience overall, and they like it, which is great. I think you're hitting on, sort of a need that exists in the news marketplace today. And again, that appears every Monday at thecentersquare.com. We like to talk on Mondays about, of course, we're taping this on Friday, but we're going to release this on Monday. We like to talk on our Monday show about what's to come in the week ahead. And in most weeks, there's a fair amount of variation. Reports will come in, we'll get data from certain sources, economic indicators roll. The week ahead is kind of interesting because there is a lot of talking head time coming from the members of the Federal Reserve, including Chairman Jay Powell, who's going to speak toward the end of the week, I believe it in Jackson Hole, Wyoming.
Yeah.
Topic that's on everybody's mind. I mean, when you start talking about the Fed, and this is an obviously one for one, will be the Fed funds rate. And, we have gone 8+ months without a change in the rate. There's been a lot of talk about whether the rates are going to come down. And I think maybe some of that's actually shifted to not whether they're going to come down, but how much they're going to come down, in the next, Fed meeting. So could you walk me through the week ahead? I mean, in terms of the individuals who are speaking, what the value of each might be, and then let's come back around and talk about what you think the Fed's going to do with the rate.
Yeah, it's interesting because the Fed speakers next week, you're going to have Fed Governor Christopher Waller, Atlanta Fed President Raphael Bostic, and of course you're going to get the Fed chair himself. And what's interesting about that is they're all very balanced. There's nothing much to it. Like, you don't have, usually you have somebody who's kind of like hawkish, and you got somebody that's a bit dovish. But these guys are very balanced, and they're experienced, and they're people that you can count on to get the job done. Who also understand economics, economic data, how to interpret what's going on. And it's a steady hand. It's like if you were on a Fed plane and you wanted a plane to land safely, you would trust those guys to do it. You would want those guys in the cockpit. And the last time we heard Christopher Waller speak, it was in a speech entitled "Getting Closer" back in July.
Mm-hmm.
And Waller, in his assessment. What I love the most about his assessment is that he just kind of breaks it down. He first looked at economic activity and real GDP numbers. And real GDP grew at about 4% last year. In the second half of 2023, GDP grew at about 1.4%, slowed a lot in Q1, rebounded somewhat in Q2. I think Q2 we're at 2.8%. And then you look at the Atlanta Fed GDP now, and it was at 2.9% last time I checked. It might have changed now this week. So you see some, in fact, why don't we check it right now, live on the air? All right. Atlanta Fed GDP now, it's at 2%, right now, running at 2% for the third quarter. And so you have economic activity slowing. You have the labor market loosening quite a bit. The unemployment rate's the highest it's been in a while. At 4.3%, higher than the pre-pandemic unemployment rate. You have, part of it has been a big increase in labor supply, but also we had some temporary layoffs. They're not permanent, they're temporary, but not necessarily related to Hurricane Beryl. We all thought it was Hurricane Beryl only, but actually, it's kind of like these layoffs were kind of spread out. On top of that, you have the employment gains very concentrated in just a couple of sectors. And so you have a labor market that slowed significantly in the past year. You also have inflation that has come down and continues to come down. We got inflation at 2.9% now, core at 3.2% year over year, increasing at a very low pace on a monthly basis. PCE falling faster. So you're getting closer to the Fed's 2% target. And of course, monetary policy, you got a Fed funds rate at 5.5%, 5.25%,
Right.
to 5.5% range, which is way too restrictive, in my opinion, for an economy with inflation running at, I don't know, 2.5%, and so essentially, Fed policy will have to adjust, and I think the market's got it spot on. There will be an adjustment in September, and by the way, we got housing starts data that came out today, and it's just like shows a big decline. I mean, squeezed. Housing builders are getting squeezed, and you see a big decline in housing starts, single family homes, home construction. All of that is just showing up to basically lead to the conclusion the economy is slowing. It's slowing fast.
Yeah.
And while consumers are still in good shape because they're able to kind of change their spending habits. And, and we were joking around on an earlier podcast that people are actually going to look for bargains. And, essentially, shopping at places like Walmart, great for Walmart, but ultimately you're starting to see a slowdown. And because of that slowdown, we're likely to see rate cuts. And those rate cuts hopefully will be gradual because the economy is still okay the consumer hasn't, the labor market hasn't crashed, and hopefully the Fed hasn't left it too late for rate cuts to come down, flying down like an elevator. And so, so that's, and so I think Fed Governor Waller is going to kind of reiterate this and make the case. And I look forward to that on Monday morning because the market will respond to those comments. They always do. So I think he's one of the smartest people.
Way too early, right? I mean, prognostication, right? I'm going to put you on the spot. Yeah. Do they lower the rate by a quarter? Do they lower the rate by a half in September? You got plenty of time for us to come back around. We have literally maybe like a month.
I think as of right now, it's a quarter. As of right now, it's a quarter.
Okay.
But it's a quarter as of right now. But we're going to get PCE data. I think we're going to get PCE data before the September meeting. And I think we're also going to get another CPI report and another jobs number, jobs report. And if the jobs report comes in lower than expected, or we start to see employment decline, then you're going to see a 50 basis point rate cut, and perhaps even more if you start to see like a decline in employment, right?
Yeah.
If employment growth remains slow or sluggish or stalls, we're at between 25 basis points and 50 basis points. We're going to get the minutes of the Fed's July FOMC meeting, right, on Wednesday this week. And that's really going to be revealing. It's going to tell us kind of where the debate is at. and where different members might be at in terms of the rate cuts that I think are coming. And then lastly, I think this week we're going to get existing home sales with which, pending home sales saw a rebound. So I'm thinking, we could see kind of like flat, instead of continuing to see a decline in existing home sales, we could see existing home sales kind of, flat here, having bottomed already in June. And new home sales in July, we hear from builders that things are not well, that they're not feeling great about the current situation in terms of their confidence. But perhaps we might see an uptick in new home sales. Why do I say that? I say that because July mortgage rates continued to decline. In July, existing homes coming on the market kind of fell off a little bit. Inventory didn't rise as much as it had been. The growth in inventory has slowed. And so perhaps more, and by the way, the share of builders offering incentives has increased, and the share of builders reducing their prices has also increased. And so all of those things, right? Again, lower mortgage rates, lower prices or price growth easing, lower in some markets, and more options for buyers could translate, especially in the new construction space, could actually translate into higher new home sales. So I'm one of those people that doesn't think I don't think we're going to see existing home sales and new home sales decline again in August. I'm going to go out on a limb and say you may get existing home sales bottoming already, or maybe at the bottom in July, and then you may see a small uptick in new home sales. I've been saying it for a couple of weeks now, and I think we might get there. And hopefully, I'm right. I'm right about this. And
we'll keep an eye on it.
This rebound in new home sales. Fed Chair Powell is going to reiterate everything I just talked about just now. He's going to take a more balanced approach. He's not going to give you rate cuts for sure, even though we know they're coming. And he's going to just kind of recap the economic data that's come in. He's not going to guarantee rate cuts because it's not in his power to do that. But he's probably thinking just like we are, based on the totality of the economic data, like he likes to say, that rate cuts are coming in September.
Okay. Well, I appreciate the insights there. For Orphe Divounguy, this has been Chris Krug. Subscribe to Everyday Economics and dozens of other quality podcasts at americastalking.com.